Good morning, everybody. This is COOLA from Rawstocks. We have another edition of the pre-market prep for you guys, and coming off a sell down of Thursday and Friday off the S&P that was large and in charge. That was a large drop. Overall, we saw a drop to close about 3%, overall drop about 3 1/3. So it was a pretty extreme drop over 2 days. So if you were short on those 2 days, well, yeah, congratulations. So we got the sell on Thursday, sub our, that was well, realistically we got the close on Tuesday below our daily 4. We got a consecutive close behind that, and then it gapped up and then just shot down, right? So we started to see a little bit of a trend here, a little bit of weakness being shown with our daily 4 getting closed below, and then we got a large sell. Well, now what, right? We're going to get into that here in just 1 second, so stay tuned. And then quick shout out to our sponsors, Black Box Stocks and Gamma Edge. Without those guys, we would not be able to provide this data to you guys every single day. So quick shout out to them. If you're interested in the tools that we use to check out this data, go utilize the links in our bio and go check that out. All right. You know, it's Monday, so we've got to look at our economic calendar. Let's take a look at it. So it's kind of a light week on market movers. I think the biggest thing that you need to look at is we have factory orders coming out at 9 o'clock. So that's 30 minutes after open for most people. Well, for everybody. 9 o'clock is for some people. And then we have services PMI on Tuesday with our trade balance. Both of those will kind of affect us a little bit. This will give us insight on tariffs, and this will give us insight on any inflation. Wednesday, the 10-year bond auction's pretty big deal. That really reflects your mortgage rates. So that comes out at noon on Wednesday. And then, of course, Thursday, we're having unemployment claims. So if I had to guess, we're going to have great numbers on unemployment claims because the last person who put out bad numbers, Trump fired. So so keep an eye on this to be a big pop, kind of see where we end up on through the first half of this week. Second part of this week, I imagine this is going to be great numbers, and this is going to just be boosted. So we're going to keep an eye on that. That's what we're looking like for the week. Let's take a look at some of the data and dive right into it. Alrighty then. So, full complex, SPX, the S&P here, still call dominated. Not by much. We're much tighter here than we have been in quite some time. Much tighter. But spot price is kind of near this zone right here. And we are seeing a lot of overhead shorts, right? A lot of overhead shorts kind of on here. But realistically, let's just see where we're at. Let's see where we're at real quick on SPY. SPY didn't give me the number. We're at 625. Okay, so that's about 62.70 on the SPX. So 62.70, this range right here, up in this range, 62.75, 60.70. So there's still a lot of overhead shorts on. Target down towards 6,200, but you can see this is a really strong net delta here. So imagine people are selling puts into that range. Let's look at what we're looking like for the day. A big IC here set up. So a big condor set up between 6250 and 6200. This is large and will likely hold. Okay. Let's take a look at this here. Okay, so All right, so let's set this up. 6200. So was it 6205? No, I'm just gonna put it at 6201 because we have the key level there. So this is going to be our well, let's just do this first. 6200 to 6250. This is the range they have, okay? So we've talked about this in the past. This is not a very big. It's not a very big range here, okay? But what we've talked about is, what we've talked about here is that this range will act as a magnet in two senses. So it will magnetize towards this range as we're opening up kind of at the top of this range here, right? We'll see if it wants to come back towards 6250 at open, but it will act as two different things, and they're both magnet related. So magnetize towards it, or be like a reverse polarity and break away from it. Okay, so those are the two things that we typically see when we see some type of setup where we're above this and it's a very, very tight range like this. It will magnetize towards it or magnetize away from it. Currently, based on the net delta that we have here, the gamma exposure, I'm going to assume that we're going to slip back into this range based on what we're seeing. Even though we're in a really strong we're over the top of this net position, this net positive position here. This will act, because of the overhead here, this will act as a magnet initially, in my opinion. So the idea here, which this is like I said, a tricky one. Okay, this is gonna look a little weird on how we set this up. I'm going to set this up here to say template. This is our positive gamma wall, but it's also, we'll set this up so we can see it. This is our positive gamma support. Okay, so this is a good pivot area here to understand that this is going to act as a support. If we open up over the top of it, watch for a check, for a run and a test towards 6300, or we'll see if this thing starts turning bullish and we start to press up above that. Okay, but watch for the test towards 6300 and see if we want to get rejected there for a retest or slip back down into the range if we hold this initial 6250. Okay, watch the hold here for press up. Watch the previous stays high to act as liquidity and resistance here. Okay, but watch for the push up towards 6300. So if you're watching the press off of this for a continuation to the upside, you're taking profits into this range, and you're watching most of your profits taking your profits there. Excuse me. If we slip this, you need to be cautious. Okay, like I said, there's a lot of overhead shorts here. 6200, it would be to the downside, so we'd make a new low, and at that point you'd watch for dealers to kind of bring you back up here and show that support there. If we slip 6200, that could indicate to us that we're likely to see some type of VIX event again, and see that VIX gets spiked, and then maybe we sell through that. There are some larger targets when you start looking at that full complex, like 6150 and 6100 below us, but they're not to the point now where I'd say they're magnetizing us down. It's more so breakdown areas to look at. I would look at this to mainly hold some level of chop today. So keep an eye on that. Think that this is going to be more so a bullish day or a chop day. I don't think that we're going to get a continuation to the downside today. I do not think that is likely to be the case. So let me switch this up here. This is going to be your negative wall. So acts as support, right? And your transitional area is this. It's a pivot point directly at 62.45. So like I said, this is a major pivot point right here. A major pivot point. This slips into your negative zone here. So watch this to act as a large pivot point here, 62.50 to 62.45. If you want to, you can look at this as some level of, you can just mark this out as a pivot today. Well, that was the wrong one. Look at that as your pivot, okay? And know that if you drop below this, it's likely to induce us to sell back towards these lows and maybe even our 6,200 level. But if not, watch it act as support. I will definitely be looking to try if we open up above that. I don't know if I'm going to go short towards it, but I'll definitely buy the call near 6250, looking for the press and hold of this towards the previous Friday's high, and maybe even a test towards 6300. Okay. But if you slip that area, then you need to be cautious, and I'd likely go short below 62.45, especially if you see a sell down below it, pretty strong sell down, and a retest towards this. Yeah, we're looking for the sell down and the continuation towards that range. Okay. Let's see how Confluence looks with SPY. I imagine it's going to be put dominated. Yep, very much put dominated here. Pretty strong on the negative side here. Okay. So as we stand right near that 62.5 mark, or 625 mark, we have a decent amount of overhead shorts, but there's a lot of positive net exposure here, gamma exposure here. So this is interesting to see this read. There's still significant amounts of calls towards 650, towards 640. These have increased since our pullback, and that's not necessarily surprising as people are looking to get cheaper calls for the upside. But will we have that momentum yet? As you can see, we do have some larger pulls towards 610. Look at the negative exposure here at 269,000, and it increased to 600 here at 178. I think it's important to know. Let me see if I can pull this up off screen here. Let me see. Give me a sec. Give me a sec. Let me see if I can pull this up. Give me 1 second here. Gamma Edge. I think it's important to understand here. Okay. These are important areas to know. There's short JP Morgan's hedge right here. Okay. Is short into 60. And this might not be, let me pull this off. This might not be the updated one. Excuse me. There we go. Let me pull this up on the chart. So it's important to note that JP Morgan's hedge is up. It's 8,000 contract short call at 66.55. So they're short on calls. They're selling calls. They're long on puts to 60.15. Okay. So this means that they're expecting us to go down towards 600. And then a short put at 50.80. So this is a large volatility range here for their quarter, saying that we can go all the way back down to 508. They expect us to be at least towards 60.15, or a little bit even further than that for the quarter. So they don't expect us to retake any new highs, and then they expect us to have negative pressure down towards 60.15. But these can obviously change, and they can also reposition off of this. But these are areas where you need to take note. Okay, so our next high is probably going to be somewhere in that range after this flips, and then you need to keep this on your radar that a 60.15 visit is probable. If we start seeing a bigger sell down, that's probably going to be our target. All right. Short puts, like I said, they're selling puts down towards 50.80. But I thought it was important to cover that collar of JP Morgan's. And yeah. All right. So SPY we saw. Let's go in here real quick. Let's update this real quick. So we had put dominated 640. Oh, no. That's full complex. 628 to 625. Okay. So that is the range of SPY. So that puts us down towards 628 to 625. It's close. This is more so talking about making 6250 bounce up towards this range, right? So 625 here. We have 628 here. And then we have 626, positive transitional area. Okay, so this is going to be your positive gamma wall. This is your negative wall, and it also acts as your shelf. So this is a double up. This is a doubled up area here. So as long as we're underneath this, let's go negative shelf. Okay. So what this means is virtually break above 626. You're potentially getting that 628 fill. This is why I talked about watching this area here as a potential liquidity or sell point, because this is where you flip into positive gamma support. All right. So again, this area could act as liquidity, sell down, and move below its negative gamma shelf and gamma wall here, and move towards SPX's range, which is virtually between 623 and all the way down towards 617.55. All right. So watch that area to act as resistance. If it starts slipping below this range, there's a clear level here that's important, as you can see. Right in this range, this is a clear level at 622. I don't know if that lines exactly up. No, it doesn't. It doesn't align exactly up with our SPX data, but it's something that you'll see traders monitor right in that area. That was a pretty good sized pivot point there at 622 last week. All right, moving into let's go to Tesla. Up 2.5%. This is kind of where we're looking at on Friday, where we said virtually that we had a pivot point at 305, and I said if we slip 305, you need to be very careful. And it had a pretty strong sell down towards 300, which is kind of where we were expecting the sell down, even into that 298 area. It retested it, got above its gamma wall here, and really had a large squeeze off of that, but got into that negative gamma shelf and just started selling down, and then ultimately slipped it and then used the gamma wall as resistance for the rest of the day. But right now we're at 310. So let's look at the data on Tesla. Full complex here is called dominated gamma conditions. Again, still 350 the high side, 290 the low side now. You're starting to see some overhead shorts start to come in, but nothing really dominant. Okay. Nothing really dominant to me. In fact, this looks quite bullish, to be honest with you. Um, we got bit on this last week, so I don't want to say a revenge trade, but if things do come back um, in our favor here, we'll definitely be looking at it. Might look at out of the money strikes here instead of going so in the money and then getting just dumped on like we did. Even though the market was bearish, Tesla was pretty bullish, and we went for it and ultimately flipped on us, and we got in trouble. So um, let's take a look. Let's see, 315 to 300 is going to be the range here. So down to 300 to 315 is where we are. This is going to be our wall and our wall. Transitional period 30, what was it, 305. And then our positive support 337.50. 307.50. Okay. All right. So this is what we're looking at here. As we open, there's a couple different checks. Obviously, you guys know I talk about this often. If this is our range here for the day and our positive gamma support's right in the middle, I just avoid it, right? Or you keep something very tight for the upside here. This makes no sense for you to buy Monday morning full premium right smack in the middle. Doesn't make any sense. Now, if it breaks through here and you start to get towards your negative gamma shelf or even your wall here, those are both areas where you can start to look at, maybe looking at a position, but I want nothing to do with Tesla at 307. I know it looks bullish towards 315 and potentially above that. Honestly, it does. But I don't want to buy. I avoid this at all costs. So even though that does look like it has pretty good upside potential, right? I'm going to avoid this based on solely on the positioning here of what this looks like. I'll just pass on it today. But what do I think will happen based on what I'm seeing? Probably a bounce off of 307 or into 305, and then see this thing go and retest 315. At this point, I imagine that we'll probably see a sell down off 315 or consolidation and move back down between some range of 307 back to 315 today, and maybe just kind of chop here, maybe even create some type of bull flag for some type of move up, right? That's kind of my opinion on this here. If you do break above 315, probably your biggest move would be to 320. 320 into this range would probably be the high side. Best case scenario towards this 321 high here. And if it really, the market starts screaming, 330 would be your absolute upside if we start to see some type of reversal on the market, some type of recovery, right? But I find it the odds more so that we find a small bounce off of here and we run a chop between these two zones here. NVDA, I'm sitting at 175.60 here. Let's pull the data on this. All right, so we're seeing we are seeing a pretty sizable short at 187.5, but you're seeing a large expansion up to 190, potential up to 192 here. Okay, this could be some level of call spread here, but this is interesting that it has such bullish look today. Oh my god. But like I said, there is an overhead here, a large overhead, but that is something you don't see often. Expansion to 192 on the level here. Let's go 192. big sell off. I talked about, if you guys follow me on X, I talked about where there was a buy signal. Even though this looks crazy, it looks like a buy signal. It's that, and that is this right here, right? That is our or percent of stocks above a 20-day average. We talk about this in the sense of a swing meter. And this is where you would buy anywhere in this 25 zone or into anything below that. That's where you start to hit the buy. For a lot of investors, they're buying on a discount. So this is MMTW. This is something where you look to buy down here and you sell at the top of it. This is just a swinger, an old, it's elementary, truly. But this is an old little thing that people have been trading for a long time use. MMTW on TradingView. Go check it out. Set yours up from 25 to any. We'll just set up lines at 25. This is just more so for a visual, but 25 and then up to like 75. Set your horizontal line on both of those and a trigger on it, and when you're topping that and bottoming that, those are your areas of a potential sell down or consolidation, or even a potential buy, right? So, anyways, moving back on. Sorry, ADHD. 177.5 going to be your positive gamma support here. 177.5. Right here. We'll put our alert on there. Gamma wall. You ready? 192. There's like I said, a large overhead short at 187.5 that you need to keep an eye on. 187.5 right here. We'll go overhead short, overhead short. We'll keep an eye on that as a potential level. But if I had to guess, if we start really jacking up towards the upside here, this will probably get closed and it won't matter. But yeah, that's really strong here. Your shelf is realistically 170. And that's also your demand. So it's one of those things you have to look at here and say, we'll put it at 175 based on what I'm seeing. We'll do it at 175. We'll disregard this. 175, it's a pretty big split. And then we have a large magnet at 170. So we will put this at 175 for our shelf here. 175. This will be your negative shelf. Okay. So as we stand here at this, watch 175 to act as a pivot for you here. If we slip 175, especially if we see a large sell through it, watch again for that retest for an extension down towards 170. If we get that, that's a good buy area at 170. You could take some lottos for that 192 expansion here, but I find it more probable or more economical for you to look at this as a 177.5 test. So you can look for 170 to hold to get the expansion up towards 177.5. As we stand here, I don't know if let's just put it this way. You could try a 175, but this is so tight and it moves so fast in the first 15 minutes. You got to be really careful at buying on this 175. I don't mind that at all. You could get into 177.5 calls right off the rip if you take it in consideration with your risk versus reward setup or your capital management and say, I'm okay buying here and I'm okay buying here. If that works for you within your trade limits, then by all means, you're in calls right off the rip and looking for a potential drop below here, and you can hedge this, right? You open a 175 call, you break below 175, you go the hedge for the 170 visit, and then you release your hedge and you look to write it back up. Okay, that's how you would handle that. Ed, I see you chat. You're typing. I don't know what I'm looking for you, brother. I don't know what your question is, but once, like I said, 177.5 call. Not a bad play at open if we open right at 175. But if you start seeing a slip below 175, especially start to see some candles close below there, watch for the retest, expansion down towards 170 or some type of recovery up towards 192. This only happens if the market recovers. Okay, this only happens. Any advice on to? Yeah, absolutely. And go back and back test the MMTW. I wrote about it on X. I'm gonna do a quick little insert about this real quick. I wrote about it on X on how people with 401ks, how they invest in their S&P, just blindly through their work, and just every time they get a paycheck, how that DCA methodology actually loses you up to maybe potentially up to 5% annual returns. So I'll retweet that today. If you're not on X, then message me and I'll send you a link directly to it. But it is interesting, and it is back tested to show that if you're able to sideline that and say something like bonds, like short-term bonds or something like that, until you get that buy signal like we got on Friday, and just put all that money in there at that point instead of DCAing every 2 weeks or however you get paid, that you do see a much better average, and it is a very lucrative type of way to handle your 401k. Talk to your financial advisors about that. I'm not a financial advisor. All right. But yeah, so that's it on the play here at 175. Watch the 175. Hold. Watch for the press over 177.5. If we get the press over 177.5, I would imagine that the SPX is going to be rising towards 6,300 and potentially getting that full move on SPY up to a little, I guess that's about 6,300. So watch for that test towards 6,300 if we see this setup kind of playing out in NVDA. That would not shock me at all if we saw that move from there. Okay, so we covered that. We covered all of the indexes. We've covered NVIDIA and SPY. If you guys are interested in, let me pull this off screen. If you guys are interested in getting access to our trades and what we do, come over to wap.com/Rawstocks. That's right here, wap.com/Rawstocks. Click join. We actually have a 7-day promo right now. If you're not a member of our premium, you can get full access for $7. That's $1 a day. Get full access to it. It is not a subscription. It is purely a 1-week pass. You can join on that, but if you do join in our premium trader or our Rawstocks free limited, you get access to our Discord server. But with this, you'll get access to everything we do. So, and this as well, but this is just a one-time 7-day little $7 pass for you. So, guys, thanks for tuning in. Hopefully this is insightful. Hopefully this is beneficial to you. And if it is, then let me know about it. Make sure you guys like and retweet this and reshare it, and help us out. So thanks for tuning in. Until tomorrow, we'll catch you later.